Hi everyone, so in today's video I'm taking a closer look at Prosus versus Naspers. Now this is a follow-on video from the video I put out recently about buying Tencent through this Naspers Prosus structure. By the end of the video, hopefully I will help you understand the differences between the two and, in my opinion, which one that I think is probably the better play. But honestly, this is a really difficult topic and it's very complicated and I've probably missed something here. So if you see something that I've missed that's really obvious, please let me know in the comments. I'll try to update this video sometime again into the future, but here's my best attempt so far. Okay, so the first thing I want to cover is the share swap situation, and then I'll get to which one we should buy. The share swap situation is something that's been happening recently, and I think it's important to cover because it does sort of change the prospects of both these companies. Well, in my eyes, it does anyway. So let's get into that. So the issue is, before this share swap situation, what they're trying to do here, the management team at Naspers and Prosus, Naspers is just too big for South Africa. See, currently Naspers has grown so big because of this Tencent stake that it has, that it now makes up 25% of the Johannesburg Stock Exchange. 25%, 1/4 of the entire stock exchange. Now, this is a big problem for all the institutional investors in South Africa because many of them have rules about how much exposure they're allowed to have to one particular company. So, as the stock price tries to move higher because Tencent gets bigger and then Naspers, because it owns Tencent, should go with it, well, the institutions, they actually have to sell some of their Naspers stake just to keep within their own rules. Now, okay, in my personal opinion, this is silly and something that I'm not too concerned about as a long-term investor. I think it will, just because these institutions have these silly rules, shouldn't really affect me and the value of the asset, but it kind of does because it kind of restricts the share price going higher. Maybe this changes, I'm not sure, but look, it seems silly to me. Then we look at the Prosus side of the equation. Now, Prosus is actually too small for Europe. See, although it has this huge asset in Tencent, just like Naspers, which owns Prosus, it doesn't have a lot of shares that actually trade on in Amsterdam. So it's actually considered a smaller company. Again, this is silly because funds that are tracking the indices in Europe, they don't have Prosus in their, say, the top 20 companies of the European index because Prosus doesn't make up enough. Even though the asset itself does, there's just not enough shares being traded in Prosus on the Amsterdam stock market for it to be big enough for these funds, which means that it just creates a silly problem again. So the company realized this, and what they need to do is they try to fix this silliness. So I actually don't particularly like this share swap idea because the company is going through all of this extra work and restructuring just to please the silly rules of these institutional investors. But if they can make things easier for institutions, then there is a chance the share prices rise and potentially close this discount between the Naspers Prosus and that underlying asset value of Tencent. Now, if you want to know more about what I'm talking about in terms of this discount to the Tencent holding, that's exactly what my previous video on this topic, I really dug into details about this and why this discount is, how big it is and why it exists and things like that. And I even gave a valuation of Naspers and Tencent and Prosus as well. So go check that video out for more details on that particular topic. Anyway, back to this share swap. The plan is for Prosus to buy more Naspers shares, making them bigger, and then they'll make them into the top 20 largest companies in Europe. Therefore, Naspers will actually get smaller and it won't be as big on the Johannesburg Stock Exchange. Therefore, the institutions there don't have to keep trimming their stake in Naspers. Hopefully, it's a win-win for the institutions in both these places. Now, we're going to talk about the tax implications because this comes up as a common question that I see around this share swap deal is what is the tax implications of this what's going on? Regardless of whether you own the Naspers or Prosus stock, the South African government are going to get their capital gains tax. If any of the Tencent stake is sold, Prosus and Naspers are both tax residents in South Africa and will be subject to capital gains tax there. So there is no difference, and I highly doubt Naspers will be able to get out of this capital gains restriction that they have. See, the South African government are very aware of the potential tax windfall they will get if Naspers or Prosus sell any of their Tencent stake. So after this share swap situation, this won't change. Well, not in the short term anyway. I don't know what the company is planning for the future. Maybe they are trying to get out of some of this massive capital gains tax situation that they're going to have if they ever do sell their Tencent stake. I actually don't want them to sell the Tencent stake anyway. So that would be a red flag for me regardless. So look, people who think that the Prosus have a better tax situation than Naspers, that's not true, because Prosus is a tax resident of South Africa as well. Just need to be clear there, I think. Now, there's a lot of pushback on this idea. This is from the institutions in South Africa. Actually, most media people in the world think this is not a good idea. So the main argument is that it overcomplicates things, and it does. Prosus owns Tencent, Naspers owns Prosus. But now, after the share swap, Prosus will also own a big piece of Naspers. Look, it's a complicated mess that needs to be deciphered so that investors know what's going on. And it's mostly going to be put in the too hard basket for most people. And that's going to drive away regular investors. When you get these complex structures like this, where one company owns part of it and the other company owns it as well, and it becomes really messy and hard to keep following of what's going on. And a lot of people just want to buy the Tencent stock directly rather than Naspers or Prosus. So I see that. Then we talk about the currency issues. So this is another question that comes up quite often in the case for Prosus versus Naspers. So Prosus is on the euro, and Naspers is technically traded in South African rand on the Johannesburg Stock Exchange. Now, if I was a South African investing in the Johannesburg Stock Exchange, I would be exposed to the fluctuations of the South African rand. And for those who don't know this, it's a pretty unreliable currency. But NPSNY, which is the Naspers ADR listing on the over-the-counter markets in the USA, that's in US dollars. Therefore, if I buy this NPSNY, have no exposure to the South African rand. Rather, I have exposure to the US dollar, to the Tencent company's earnings, which is in Chinese yuan relationship. So that's where I have the exposure. Whether the euro or the USD is a better currency in relationship to the Chinese yuan, well, I have no idea, but they're both pretty stable and I think they're both fine. Plus, PROSY is actually the ticker to buy Prosus over the counter in US dollars. So look, currency isn't an issue in my opinion. I think buying it in US dollars, because I hold US dollars, is totally fine, and I don't have to worry about the South African rand. Now, what about the South African government and their issues, and things could change? Now, look, like I said in the tax section, Prosus will still be a South African tax resident. Therefore, Naspers and Prosus are still at risk of dramatic South African government policy changes. Both companies have the same risk here. Naspers is very, very important to South Africa though. Over the past 5 years, more than half of all the gains made by the Johannesburg Stock Exchange is attributed to Naspers. So without Naspers, the Joburg Stock Exchange would be less than half of where it is today. So all the pensioners would have less than half in their portfolios if it wasn't for Naspers. So Naspers is the most important company in South Africa by a big margin. Okay, the discount on the discount. So I've said this in the previous video, but it's a little bit like this. Prosus is currently somewhere around a 25 to 35% discount to its 10-cent stake. Naspers is effectively made up of 99% Prosus. Now, it's a holding company, so this is Naspers. It's a holding company which owns another holding company. And the Naspers discount to the underlying 10-cent stake, in my calculations, is somewhere between 35 and 50%. So far, I would take the bigger Naspers discount, even though it just adds another layer. The management team are the same on both companies, and it's just the location of Prosus and that extra layer that is different, in my opinion. Now, what about what other people are doing? So I like to look at super investors all the time, who I think are some of the best people in the world, who have been investing for long periods of time. Robert Vinal of RV Capital, based in Switzerland, he's a super investor that I like to keep an eye on. And he is a very good long-term orientated investor, and he has a position in Prosus, not Naspers. Now that tells me a few things. One, that he thinks Prosus is probably better for some reason than Naspers. And he also thinks this is a good investment. But then I think about the incentives of management. So the actual Naspers Prosus CEO and Chief Financial Officer. So this is actually from Bob Van Dijk, the CEO. This is what he said. We continue to be committed to Naspers. This is actually just after they announced the share swap. Basil, the CFO, Basil Skudordis, I don't know how to say that name, and I actually have most of our financial health, our long-term financial health, tied up in Naspers share options. And we promised our shareholders that we will not exercise those options. This is what the CEO said. So when the CEO has a lot of their financial health tied up in the Naspers stock, I feel like they're going to do a lot of things to make sure that, well, one, their own net worth is protected, and is hopefully that they're going to try to close that discount because it helps themselves. I don't think they're just going to leave Naspers up behind and then just focus all their attention on Prosus when they have all these Naspers share options. So back to the main question, Naspers or Prosus? Well, I think a few things could happen. The increase in size of Prosus after the share swap means more index funds have to buy Prosus. Therefore, the share price should increase. The decrease in size of Naspers on the Joburg Stock Exchange means more institutions can buy and then hold their Naspers shares, also hopefully increasing the share price. Or the other thing that could happen is nothing really changes because there's a lot of stigma around Naspers and Prosus already. So my opinion is, well, I like Naspers, mostly because of the bigger discount over Prosus, but also because the CEO has his wealth tied up in Naspers stock. So many Naspers shareholders are just sick and tired of this discount. But what is more likely to happen? Does the discount get even bigger? Does it get to 100%? That seems ridiculous. Or eventually, does the sentiment change? Naspers have some success in some of their other businesses, and eventually that gap closes. Look, even if the discount stays the same, we are getting about 15 to 20% return on our investment from Tencent anyway. So look, I like Naspers, and I like Prosus, but I like Naspers a little more because I just like a bargain. I don't think it's actually a big deal which one you buy. Maybe Prosus reduces the discount faster because it will be bought by index funds, but I don't know. And I don't know if that will actually close the discount. So I prefer the bigger upside with Naspers. And I don't mind going against the crowd and investing in this very unloved stock. The downside, in my opinion, is very low because of that 10-cent stake, but I think the upside is strong if sentiment can change. And Naspers can show they actually are diversifying away from Tencent with all their other investments and startup projects. Remember, they're a big VC company essentially. Now, again, watch my buying Tencent through Naspers video for my valuation of why I think Naspers is a bigger discount to the Prosus discount, and why I think there's a really interesting opportunity here. So whether at the end of the day you choose Naspers or you choose Prosus, I think it's a pretty good investment idea. And I think we're just debating over how much upside we could potentially get. Maybe Prosus does a little bit better, maybe Naspers does a little bit better, but I think they're both going to do really well. So I hope you enjoyed this video, and if you did, please hit the like button for me so I can get some feedback on whether this was a good or a bad video. The likes do help the video spread to more people who might be interested. The brokerage accounts that I use to buy my investments are Interactive Brokers and Saxo Bank. Now I have links in the description. These are the safest two brokerage accounts that I personally use. Look, don't get sucked into those free trading apps like Robinhood. Those don't give you access to international markets either. Now my links are affiliate links, so if you want to support my channel, that's the best way to do it. And please also remember that this is all just my thoughts, and I'm sure I have plenty of biased opinions, so please take responsibility for your own decisions. I'm not going to ask for a cut of your profits, so don't blame me if you lose money. Thanks for staying to the end, and I'll see you in the next video.